This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices came off earlier highs on Monday but were still up more than 15% at levels not seen since mid-2022 as some major producers cut supplies and fears of prolonged shipping disruptions gripped the market due to the expanding U.S.-Israeli war with Iran. Brent crude futures were up $15.51, or 16.7%. at $108.20 per barrel at 0642 GMT, on track for the biggest ever jump in a single day, while U.S. West Texas Intermediate crude futures were up $14.23, or 15.7%, at $105.13. Disruptions in tanker movements and rising security risks have already slowed shipping activity, and left Asian buyers reliant on Middle Eastern crude especially vulnerable because the crisis is unfolding around the Strait of Hormuz, through which roughly one-fifth of the world's oil supply passes.
Iraqi oil production from its main southern oil fields has fallen by 70% to just 1.3 million barrels per day as the country is unable to export oil via the Strait of Hormuz due to the Iran war, three industry sources said on Sunday. Production from the field stood at around 4.3 million barrels of oil per day before the war. Crude storage has reached maximum capacity and the remaining output after the major cut will be used to supply the country's refineries, said an official with the state-run Basra Oil Company, BOC, which manages production and export operations from the southern fields.
Moving on to the top news in the energy sector.
Trump administration officials on Sunday defended a decision to temporarily lift some sanctions on Russian oil and predicted that a sharp increase in gasoline prices resulting from the Iran war would last only weeks. Appearing on multiple TV talk shows, Energy Secretary Chris Wright and U.S. Ambassador to the United Nations Mike Waltz said a waiver issued last week to allow Indian purchases of Russian oil would alleviate pressure on the global market. It's a 30-day pause to allow, which is just kind of common sense, to allow the millions and millions of barrels of oil that are sitting out on ships to go to Indian refineries, Waltz said on NBC's Meet the Press.
Governments in Asia are scrambling to limit the impact on economies and consumers from the widening Iran war, which fueled a record surge in oil prices on Monday after key producers cut output and Tehran signaled that hardliners will remain in charge. In South Korea, which buys 70% of its oil from the Middle East, President Lee Jae-myung said Seoul would cap fuel prices for the first time in nearly 30 years and warned against panic buying. Speaking at an emergency meeting, Lee called the crisis a significant burden on our economy, which is highly dependent on global trade and energy imports from the Middle East. Next, we have the top news in metal market. India's finished steel exports climbed 36.6% year-on-year to 6.02 million metric tons in the first 11 months of the financial year, according to provisional government data reviewed by Reuters on Monday. India, the world's second biggest crude steel producer, imported 5.6 million metric tons of finished steel during April to February, down 37.4% year-on-year, the data showed. India's crude steel production increased 11.2% year-on-year to 153.61 million metric tons over the same period.
Aluminium prices in London hit their highest level in nearly 4 years, as the escalating conflict in the Middle East heightened concerns about tighter global supplies, offsetting downward pressure on demand from a stronger dollar. Benchmark 3-month aluminium on the London Metal Exchange hit its highest since March 31, 2022, at $3,544 per metric ton earlier in the session. It gained 0.75% at $3,472 per ton by 0706 GMT. The most traded aluminium contract on the Shanghai Futures Exchange closed daytime trade up 1.61% to 24,950 yuan, $3,607.84 per ton, after touching its highest since January 30 at 25,860 yuan earlier in the session.
We will now look at the top news in the agricultural sector.
Chicago soybeans rose on Monday to their highest level since May 2024, buoyed by further gains in crude oil prices amid the ongoing U.S.-Israeli war with Iran. The most active soybean contract on the Chicago Board of Trade climbed 2.46% to $12.30 minus 1/4 a bushel, as of 0148 GMT. Soy oil gained 4.73% to 69.73 cents per pound, the highest since December 2022. U.S. soybean prices have risen mainly due to stronger crude oil prices, which have driven up fuel costs, boosting vegetable oil prices and, in turn, raising soybean prices, said Capital Jingju futures analyst Won Chungji.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.